Hello and Assalamualaikum. We are from BA2422B and my name is Hashim bin Muhammad.
Hi, my name is Natasha.
My name is Amar Izati binti Mansur.
Hi, my name is Muniza Farisha and we are going to present about ratio analysis for Panasonic Manufacturing Malaysia Berhad.
So here I will start with the background of the company. To let all you know, Panasonic is a significant Japanese multinational company. Their headquarters in Kadoma, Osaka. Panasonic Holding Corporation was formerly known as Matsushita Electric Industrial Company Limited. Panasonic provide a variety of goods and services. Konosuke Matsushita established as a market lighting socket in 1918. The inspiring history of PMMA in Malaysia is made notable by its long list of proud accomplishments that have been accomplished over the course of 2 decades. Others, Panasonic manufacturers do not really create goods but also design, develop, customize and support the software. Thus far, most Malaysian homes have picked the Panasonic brand name as one of the most popular and reliable options for electrical home equipment. With new features, increased capability and higher quality, Panasonic manufacturers operate, deliver and maintain a variety of products under the Panasonic brand name for the market.
For this part of the liquidity ratio, the meaning of this liquidity ratio are the type of financial metric used to measure a company's ability to repay its current debt without raising external capital, through the use of metrics including the current ratio, quick ratio and operating cash flow ratio. As we can see from the bar chart, the current ratio of Panasonic Manufacturing Malaysia Berhad for the year 2020 is 4.53 times and the current ratio for the year 2021 is 4.37 times. It shows that the current ratio in 2020 is higher than 2021. This means the firm is not able to meet its short-term obligation. As the quick ratio, the reading in 2021 is the highest, which is 4.07 times compared to 2021, which is 3.93 times, and this lead to the bad effect.
Okay, next I will be explaining the performance of activity ratio of Panasonic Manufacturing Malaysia Berhad. An activity ratio is a type of financial metric that attempts to measure how well a company uses its balance sheet assets to generate revenue. So the first ratio under the activity ratio is the inventory turnover ratio, which can be obtained by dividing the cost of goods sold by the average inventory. The result shows the bad performance of inventory turnover because the ITO for 2021 is lower than the ITO for 2020. Hence, the lower ITO indicates that Panasonic is unable to sell its inventories rapidly. Secondly is fixed asset turnover, which helps to assess operating performance by comparing how efficiently Panasonic generates net sales from its fixed asset investments. Thus, we can tell that fixed asset turnover in 2021 is lower than in 2020. A low in fixed asset turnover indicates that Panasonic is over-invest in fixed assets. Thirdly, total asset turnover measures how efficiently a company manages its assets. We can conclude that total asset in 2021 is lower than 2020 based on the calculation after dividing net sales by total assets. It demonstrates that Panasonic was ineffective in managing total assets to generate higher sales in 2021. Okay, lastly, the average collection period refers to the length of time it takes for the company to receive payments owed by clients. Based on the graph, we can conclude that the SCP in 2021 is greater than the SCP in 2020. As a result, it demonstrates that Panasonic is having difficulty in collecting its debt.
For the leverage ratio of Panasonic Manufacturing Malaysia Berhad, there are two ratios, namely the debt ratio and also the debt to equity ratio. As we can see from the bar chart, the debt ratio for the year 2020 is 16.40% and the current ratio for the 2021 is 16.44%. It shows that the debt ratio in 2021 is higher than 2020. This means the firm is facing bankruptcy at any time in the future. Meanwhile, the debt to equity ratio in Panasonic Manufacturing Malaysia Berhad for the year 2020 is 9.09% and for 2021 is 8.72%. This means the firm rely on owner fund rather than long-term creditor supplier.
Gross profit margin in 2021 shows that for every 1 ringgit of revenue earned by the company, it has earned Rm 0.1869 of gross profit to cover its operating expenses after providing for its cost of sale. In the meanwhile, in 2020, for every 1 ringgit of revenue earned by the company, it has earned Rm 0.1902 of gross profit to cover its operating expenses after providing its cost of sales. As for operating profit margin in 2021, for every Rm 1 ringgit of revenue earned by the company, the revenue is enough to cover up to Rm 0.1007 of the firm's total operating expenses. In 2020, for every Rm 1 ringgit of revenue earned by the company, the revenue is enough to cover up to Rm 0.1020 of the company's total operating expenses. In 2021, for every Rm 1 ringgit of revenue that Panasonic Berhad earns, it earned a net profit before tax of Rm 0.1387. In the meantime, in 2020, for every 1 ringgit of revenue that Panasonic Berhad earns, it earns a net profit before tax of Rm 0.1342. It indicates that net profit margin for the year of 2021 is better than 2020 as it has better revenue compared to 2020. For return on asset in 2021, it shows that the firm is able to generate net earning of Rm 0.01516 for Rm 1 ringgit investment in its asset, while in 2020, it shows that the firm is able to generate net earnings of Rm 0.0608 for Rm 1 ringgit investment in its asset. Lastly, for return on equity in 2021, it indicates that the company managed to generate Rm 0.0618 per Rm 1 ringgit of equity provided by the shareholders. For 2020, it indicates that the company managed to generate Rm 0.0728 per Rm 1 ringgit of equity provided by the shareholders.
Next, we move to the last ratio, which is market ratio. Basically, market ratio is used to evaluate the current share price of company stock. These are important for investors to determine whether a company's share are overpriced, underpriced, or on par with the market. As we can see here, there are earning per share EPS and price per earning PER. It shows the earning per share for 2021 was lower than previous. Lower EPS give a poor indication of the health of the company and give a lower return to shareholders. And the other one is price per earning. It showed the lower PER from the graph. It was decreased in the year 2021 by 91 cents compared to the 2020. It can be concluded that the lower PER means the company of Panasonic Manufacturing Malaysia Berhad is cheap or undervalued in that year. It means the investor has to pay less money to buy the stock of the particular company.
Since financial ratios for both years show declining value, here's how to improve them again. Firstly, Panasonic needs to control or increase the value of their current asset. The value of current asset greatly affects the value of the current ratio. Therefore, with the care of the value of this current asset successfully increased, it will not be a problem to be able to increase the value of the current ratio reading. Secondly, accelerate account receivable. Business should concentrate on rapid collection, outsourcing unpaid account to a collection agency, hiring employees specifically for the purpose of collecting overdue invoices, and reducing the amount of the time the customer has to pay are all examples of this. Thirdly, reduce the amount of liabilities. In general, if a company has relatively low total liabilities, it may gain favorable interest rates on any deal that it undertakes from lenders, as lower total liabilities lessen the chance of default risk. Next is to cut as much as overtime and surplus staffing as possible before focusing on sources of waste. Limit supply, invest as little as possible. Consider switching to a low-cost system if the company is not employing an effective point-of-sale system to integrate inventory, sales, and marketing under one system. This improves the efficiency of the company's overall shop and workforce.
Overall, Panasonic performed worse in 2021 than it does in 2020 due to the fact that everyone spends more time at home. As a result, Panasonic was able to draw in more customers who purchased more applicants during the initial wave of the pandemic. This shows that Panasonic was able to develop a good strategic plan to increase sales and revenue over the previous year. However, the world is different now due to the COVID-19 pandemic. Thus, the company must now begin strategizing how it will adjust as the pandemic and market conditions change.